Well, I can't really start a podcast series without the man himself, my business partner and my friend, Dom. Welcome, and thanks for joining me.
Good to be here. What are we covering today?
Well, let's pick up kind of where we spend a lot of our time thinking, which is around the residential real estate market here in Australia. I want to get your pulse on where you see the market because it's a pretty interesting time. And, you know, you and I have both seen different cycles, but what are you vibing and where are you seeing real estate at the moment?
This market's fucked.
What do you mean?
It's hard to say pick up from down, left or right. I know for an investor, it's difficult to say where do you go, where do you put your money, what market. It's kind of all over the shop. If you have a look at, Canberra, look at Melbourne, which have historically been strong performing markets, they're all in the doldrums. And in many ways, it makes sense, but in other ways, it doesn't. You know, those are really good, high-performing markets which have all the right macroeconomics in place to be strong-performing markets. But I think they've just copped it from a supply sense. And if you pick the wrong piece of real estate, you really suffered. Then you have a look at, Perth. You have a look at Queensland or WA and Queensland. They've performed really well, 25, 30%. And they've done extraordinarily well. The supply side's been really, really tight, and it's hard to go and get into those markets. Then you have a look at Sydney, and depending on what part of the market you're looking at within Sydney, it's neither here nor there.
Okay, let's dig in. Let's dig in on Sydney because that is my favourite market. That's a market that we both started in, we live in. Tell me kind of what you're seeing in the different components of the Sydney market today and maybe into the future.
Yeah. And we predicted this, probably one of our last podcasts, that we anticipated, which it makes a lot of sense because property prices and interest rates have the inverse relationship. Interest rates go up, property prices go down. Everybody was shocked with 14 interest rate rises that the property market wasn't weakening. And we could see that it wouldn't weaken for a while because there was no supply. And when there's no supply, people have to pay a price to get into the market. Rents were skyrocketing, property prices were skyrocketing. But then at a point, people were all coming off their interest rates of 1% and 2%, 3%, and then they're paying 6.5%. So the costs of holding onto their property just wasn't feasible. And we've seen a massive amount of suffering in the market, which is why we're now seeing auction clearance rates at 40, 45, 50%, depending on who you talk to and which statistics you're watching. And it's starting to diverge where the cheapest parts of the market are performing better because it's simply where affordability is. The more premium parts of the market have really started to suffer, where you're seeing discounts of 6 and 7%. Now, where would I go and put my money? It's hard to say. Do you go to parts of the market where you're seeing affordability or where there's discounting? Do you go and put your cash into, premium parts of the market? Do you put your money into Canberra or Melbourne where it is discounted? Or do you follow the trend? Do you go into Brisbane or do you go into Perth or, the more affordable units in, say, Sydney or the western suburbs of Sydney where it's starting to really move?
For a lot of people, when they hear development, supply, they don't really understand how difficult it has become to build and develop, particularly in a market like Sydney. I want to go back a few years to when you were working on the development side. Tell me a little bit about the process of bringing a new product to market then and today.
It's harder and harder. So if you have a look at the data coming out on approval ratings, they're historically low. They're still well below 10-year averages for apartments. I think the most recent data is like 15 or 20% below the 10-year averages. So that's, approval ratings really, really low. That's an indication of how much stock is coming to the market.
Yep.
That's approvals. Houses is still historically low as well. Even after you have the stock approved, which a lot of developments have got the properties approved, then you've got to go and price the build. And coming out of the last couple of years where the price of construction has gone up exponentially, it's now starting to flatten and even out, but it's still very, very high. And property prices haven't hit a mark where it's feasible to develop property. you and I are both seeing developers really suffering, where they can't meet the profit margins needed to sell the stock at a price where they can make enough money to make it, call it feasible. So I feel like the market's at a bit of a standstill or a hold or a holding pattern where we're not going to see a lot of stock coming onto the market because one, they're not getting it approved. And then two, even if they are approved, the cost of construction is still too high for them to be able to put it onto the market and effectively sell it at a good price. And we can see that because the cost of a new apartment, a new townhouse or a house is 10, 15, sometimes 20% higher than what the existing real estate is on the market, which is crazy because if you go and buy a new piece of real estate, which has a lot of value in it, it doesn't stack up. Valuers are giving it a heavy discount where the replacement cost of that same piece of property, it's just something's not catching, something's not adding up.
Yeah, development's definitely broken, brand new development, and we need it so much. I think we need at least 180 to 200,000 dwellings per year in Australia just to keep up with our backlog of population. And then if you actually go and talk to developers on the ground and you say, hey, if there's so much demand, why aren't you delivering it? They'll say, as you said, I have to go and get planning. I have to spend money to put it through planning, fight layers of bureaucracy to get it approved. And then when I get it approved, my building costs are going up every 6 months. I then need to price it. And then when I sell it, someone has to buy it. And the gap between what I need to sell it at and what's available on the market, it's too big. I'm struggling to sell it. Where does it correct? What's the element or what's the piece that you think needs to change the most?
Probably finance, because there's a willing market of people that want to buy the real estate, but then they're getting stuck on two key things: affordability, so being able to buy it, the costs to purchase it, and then the valuations. There's a bit of a gap there. So there are people that can't afford to buy the things they want to buy because interest rates are too high, or they haven't got the incomes to support the servicing, or the banks are really, really tight, which you and I know about, or and then the valuations just aren't stacking. The historical sales prices aren't matching where the prices need to be, and it's just making it difficult to make the deal stack for an investor or a homeowner to buy new pieces of real estate. So I think the real inflection point will happen when we start to see interest rates start to drop. And then the market will start to correct again. Maybe we'll see more confidence back into the market. And confidence really leads the way. Confidence is an interesting thing because when you go to an open house and there's no confidence in the market, people aren't excited about the future, there's 2 or 3 people. And it clears out. And suddenly you're thinking, well, this property's not going to sell. You feel the need to undercut that property. If you go to a property and then there's 20 people there, then there's a lot of competition. You feel the need to offer more than what's currently available or currently advertised at. So that confidence, that change in consumer sentiment will have a big change on what the prices are for property. But I think that all starts also with affordability. So being able to physically to go and get debt and pay for that property.
I think brand new is the missing piece in addressing our housing issue, and the brand new market has really been punched in the face over the past decade. You've got layers of government that continue to call out dodgy builders, dodgy developers, and they exist like every business. The crypto business, the stock market, banking, clothing, apparel manufacturers, there's dodgy in every market. But if you actually have a look at the numbers of dwellings that get delivered each year and how many of them are actually delivered poorly, I think, brand new has been tarnished with a bad brush. And because of that, consumer sentiment for brand new has been tarnished. And people are told constantly by commentators, by journalists, by anybody outside of the building industry, don't buy brand new. Go and buy something existing. And if you don't buy brand new, then we can't create brand new. We can't increase the rental supply. We can't address the housing issue, and we're stuck. We're stuck in this low supply market, inflated prices, everyone is unhappy. Where do you think the rental market's going, or how do you see kind of rentals at the moment? What are you vibing in terms of rentals and income for a residential property investor?
It's as you say, because there is a lack of supply, rent has increased significantly over the past 12 to 24 months. It's gone up a tremendous amount. And if you go and have a look at the rental market, because I'm always looking at either buying or renting, and I drive my wife insane with what we're going to do next or where we're going to move. So I'm always watching different types of markets, and I try and look at the arbitrage between renting something and buying something. And at a certain point, it just simply makes more sense to rent.
Yep.
If you're going to go and buy a $5 million house or rent it, it's more cost effective to rent that place. But there is also the inflection point the other way, where at the sort of lower end of the market, it makes more sense for you to buy that property rather than renting it. I think that it's a hard question to answer because it's very segmented depending on what part of Australia, even within Sydney, you know, units, townhouses, houses, Western Sydney, inner west, eastern suburbs, and the northern beaches. They all have their different places. Broadly, I think that rents will continue to increase simply because there's not enough supply. Mm-hmm. That's the simplest answer.
Now, we're coming into a territory which touches on the framework of your book.
Yeah.
You've written a book about property investing. Tell us a little bit about that book, the framework, the components of it, and as a landlord, what you need to be looking for or how to position to grow your portfolio.
Well, I think it's a audacious title to say you won't fuck it up. Because we all fuck it up from time to time. There's heaps of things that we do, that you can do in real estate that will severely hurt you or dampen your next investments. But I think broadly, what the book tries to say, or what I'm trying to tell people is, firstly, get into the market. If you go and get something, you're probably going to be okay. Then if you want to start to add layers of complexity, buying something good is a relative term, but the way that you pick something that's pretty good is by starting with the market, an area that has good long-term growth prospects. And how do you pick that? Areas that you can pay attention to the people. What's happened to the population? Are the incomes increasing over time? Is the population getting bigger? Then the other area is, infrastructure. What's currently there? And then how's it going to change? You know, you and I just went for a walk around the city. We went and had a look at the new metro station. And I remarked that I did some videos, I think 6 or 7 years ago, saying, hey, the metro is coming and you should buy real estate in metro stops because the area is going to become nicer because it's faster to get around to different areas, and inevitably the real estate will increase in price. So, you know, if you buy in areas where the area is going to get better, the infrastructure is going to change, new roads, new schools, parks, recreation, transport, these different types of things are coming in, the real estate would eventually get better. That's the most simplistic way of thinking about what's in the book. It gets a bit more complicated. It has a look. We talk about the nuances of different zonings, cash flow management, how to pick a contract, things to be mindful of. Should you buy an apartment, townhouse, or a house, and then the historical price growth and rental received for each of those different types of real estate. But broadly speaking, it's go and buy the best piece of real estate that you can buy. I think I like the term that I think maybe Warren Buffett or some smart person said, where your investments, particularly real estate, it's like a 6-shooter gun. You've only got so many shots, so you want to make sure each one counts. So when you go and take your shot, make sure that one shot that you take is the best shot that you can take. Don't spread your risk too much. Go and get the one good thing, and then that one good thing will grow, and then you can buy your next good thing.
We have a very diverse pool of property investors in Australia. Property investment is not just for the rich or the wealthy, but a lot of mainstream Australian workers invest in real estate as a way to diversify and grow their wealth. And one of the areas that is interesting and growing is the health space, the medical space, the health space, particularly nurses. You're doing some great work there with a new lending business. Tell us a little bit about that and what you've learned from working with healthcare professionals when it comes to property and property investment.
Yeah. So, Peter and I are very lucky. We got into business together 6 or 7 years ago. And we're lucky because we got into the business of trying different things and helping different communities. Wealthy is a wonderful business where we've got into helping Latin American investors because we identified that our parents were first wave generational migrants that didn't know how to invest in real estate. And we wanted to essentially close that loop and help people that didn't know how to buy real estate. That business has been running really, really well. We've got a great team of people. And then I saw another opportunity where a lot of healthcare professionals, or about 98% of healthcare professionals that we canvassed, were either interested in buying real estate or own real estate. But then when we asked them if they were aware that they're entitled to getting discounted interest rates, fee waivers like lender's mortgage insurance, they can get larger loan sizes or buy with smaller deposits, 86% were not aware that they're entitled to those benefits. Doctors were heavily marketed to by the banks, but nurses, allied health professionals, and even just frontline workers are entitled to heaps of benefits. So we created that business and it's been really good. We now talk to healthcare professionals all over Australia and help them get those LMI waivers, larger loan sizes, discounted interest rates because they need the help, particularly nurses, allied health professionals. They don't get the same financial benefits as, say, doctors or specialists do. So it's good to kind of give them that additional benefit or service where they can save $10,000, $15,000, $20,000 in LMI, which is just an unnecessary fee.
Particularly nurses, right? Because, doctors can take care of themselves. They do quite well. They're remunerated well. But it's the nurses that are on the front line that are working really hard. And there are these incentives and there are lenders coming out and trying to help them. And as you said, 86% that aren't aware of it. So there's a great message there and a great social service.
Yeah, it's crazy. A lot of these people are fantastic. They can help cure cancer, but they don't know how to read their pay slips. So they're great at healthcare, terrible at finance. So it's, you and I are about giving back to our communities. Even with you like to give back to your community. And, we both like to use our energy in productive ways, look for, identify opportunities where we can kind of give back.
Well, let's end on that. As a leader, what have you kind of learnt about yourself this year? And what are you taking into the new year? Having learnt, having experienced, having discovered about yourself?
I've learnt that focus is really important. I've been lucky to have a lot of energy, inherently just have lots and lots of energy. And as a young man, I used to run around and throw my energy around very frivolously. So you feel like you can do anything, so you choose to go and do everything. Write books, do podcasts, start businesses, help friends, help family. And, then you can fall victim of spreading yourself too thin. And when you do that, you start to notice that things will start toppling over. And I've noticed that all the people out there that have truly achieved something meaningful have focused all of their energy into doing one thing really, really well. And once you've achieved that one thing, then you can start to look to the next thing and then the next thing. But you need to have one thing done amazingly. And I guess part of that doing one thing amazingly well is the people that you have around you. Be super, super clear on what you need and what you want, but then also bring in and recruit amazing people that you trust, amazing people that are good at what they do and love doing what they do too, and get out of their way. Recruit amazing people around you and let them do an excellent job. So that's what I'm bringing in to next year. Focus, bringing in great people, and, just doing good work for good people.
Awesome. Well, thank you very much for sharing. Really appreciate it. Good luck with your investments, with business. You're one of those good people that I keep around me. So definitely something really important there to make sure that you surround yourself with the right people. And this podcast is about bringing those people to people that are listening and watching that don't have that exposure, giving back and helping you go on the journey. Thanks so much. We're going to have you back throughout future episodes, and really appreciate what you've given us.
It's great to be here, and you're one of those good people for me.
Thank you.
And Peter's a mountain of knowledge, so definitely keep on watching these podcasts.
Thank you.